Hello traders, Gary Wagner here. Just about 12:30 in Honolulu, 6:30 in New York. It is Thursday, 29th day of November, 2018, and this is the Daily Report for Gold and Silver. After yesterday's nice, respectable move in gold, had a little bit of consolidation, but it did tick to the upside when we take a look at current pricing. Most active December contract is at 12.2410, putting it up about 50 cents on the day. And then when we look out to February, that's trading at 12.2980, and that's in the unchanged column. We did go long both December as well as February gold yesterday. We'll talk about the particulars as we pull up our charts. Silver did trade lower on the day, giving up about 8 cents, closing at 14.25. Platinum also tracked lower by $4.80, closing at $8.21. But traders palladium continues to roar to the upside, gaining $24.40, a 2% net gain on the day, $1,179.70, and that puts it within $45 of parity to an ounce of gold. Now, all of that was accomplished without any hindrance or help from the U.S. dollar, in essence unchanged, 96.68. Industrials were actually quiet today, 27 points down on the Dow. When we take a look at the Standard & Poor's, it also gave up fractional amounts, and the composite did pretty much the same, although that lost almost 0.25%. So traders, we did go long gold yesterday. We went long both the December contract, which is currently at 12.2410. We also went long the February contract, and that is sitting about $5 above the price of the December's contract. Now, there was a couple of reasons that really mitigated the trigger, and I wanted to go through that along with our basic upside strategy or target. What I saw as this market recouped yesterday was a couple of things. We talked about the fact over the last couple of days that we have seen a defined narrowing between the 100-day and the 50-day moving average, and we had that first sign of a real cross where the short term in green crosses above the 100 in blue, and that to me is extremely bullish. The second, and possibly on a technical basis, the most important thing was the fact that we broke above $1,218 per ounce. That, of course, is what I have been labeling as a critical level of either support or resistance. Right now, I believe it's now once again support. We can see that it's had that effect to be both support as well as resistance at that same price point for quite some period of time. In fact, we've had occasions where it's dipped below or dipped above, but we can see that it tended to cluster with the lows when it was support right around this price point and the highs right around this price point, depending on which side of the fence, so to speak, gold was trading at. And that was what really prompted me to do that. I also had an intrinsic belief that when Powell came out and spoke yesterday, that he would tone the hawkish rhetoric down because there's so much backtalk about that and about raising rates. And I felt that he probably needed to ease some minds. And in fact, he did. We saw that real big rally. Now, today we had consolidation. We had a little bit of follow through. We did close higher on the day. And here's what I'm looking at. I believe in terms of where this market could go is initially 1246, and that is a 50% retracement, with my ultimate target being the 200-day moving average, which comes in at around 1263. That would give us a sizable profit over the next couple of months, because I think that's how long it will take there. But we'll really get an indication throughout this weekend, depending on how the meeting between the Chinese and the United States go. I don't expect the trade war to be resolved, but I do expect Trump, who's been positioning himself with a lot of rhetoric about how he's going to slap more tariffs on an additional $270 billion. He's going to make sure the 10% tariffs in place go to 25%. I think he's going to want to look good. And because of that, I think regardless of what their talks accomplish, he'll come out with some sort of rosy statement, which basically says we love each other, we're brothers, and we'll get through this, and we've had some great talks and made some progress. That is my sense. And if that, in fact, happens, we can see continued dollar weakness and continued strength in the precious metals markets. And traders, lastly, I do want to take a moment to talk about what are the odds. What are the odds that palladium would move into parity with gold? And at this point, I believe will actually take out the price of gold. We are looking at a long-term monthly chart in palladium. We can see that it closed at 1179.70, and that in fact is a new all-time record high and close. The previous highs came in at about 2001, 2002, but they came in at around $1,100 per ounce. We certainly have taken that out with a vengeance as the market closed above those tops today. Now, interestingly enough, when we look at it against gold, and that's what I've just done, I've put up a gold chart on the bottom, palladium chart on the top. We can then view the historical perspective with some reference to where gold was, because when we saw this $1,100 spike in palladium, realize that gold at that same time, I believe, was trading at around $500 an ounce, $400 an ounce. So there's been a huge discrepancy, but that was pretty much parabolic, even on a monthly chart. We had this market kind of move straight up. Let me get my proper pointer. We had it move straight up and then pretty much straight down, and then it fell into line. We can see that they did, for that point, have equal peaks and stuff. Here we've got gold and palladium at about $800, and that is when we had gold at the all-time record high of that particular precious metal. Now, we can see that over the last almost 2 years, look, if we look at 2015 and above, you can see that the range between the highs and the lows, meaning about 1,000 to 1,400, are not all that severe. At the same time, when you look at what palladium's been doing since 2015, it's quite clear. It is in another parabolic move. It's had a small retracement and now to new record highs. My sense is that gold and palladium will come to parity, and I absolutely believe, all things being equal and the same, palladium will cost more per ounce than gold in the very near future. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.